Hey guys, Stock Saturday, and it's a green week for me again. Rather nice. I'm up 4.7% for the week, which is pretty nice. Most of that has come from Cleanspark and the semiconductors actually doing pretty well. Broadcom sort of touching $1,400, did go slightly above that. And TSMC sort of doing reasonably well. Himax having a little rise this week, which is not too bad. Sort of miners not doing quite so well. Process coming down as well. 10 cent not doing particularly good. But yeah, bit of a sort of mixed bag compared to S&P 500 up 0.87%, but still just relentlessly on the up. As you, it's almost drawn with a ruler, of course, since no beginning of November, really. And the Nasdaq up 1.85%, and slightly better, but essentially still the same line since beginning of November. So yeah, not too bad. So Cleanspark has had a very unusual week. Sort of rocketed up on Monday to sort of close to $23, and sort of assumed that would continue. Bitcoin sort of carried on rising for the rest of the week, but yeah, maybe Cleanspark sort of got a bit ahead of itself. They have actually, so they're up, ended up about 8% on the week, but yeah, have come down sort of quite a bit and had a sharp correction. And then just yesterday, they put out their monthly update. A little bit sort of early, really. You don't normally get it on the first. But they have been installing new miners and getting the new facilities operational. This was during the month, so they've sort of averaged 13.88 exahash during the month, but that isn't a particularly useful number because it's only relevant for that month. They ended the month at 16 exahash, so that's pretty good. Obviously, Bitcoin difficulty is up, so the amount mined still sort of hasn't really increased all that much. 648 for the month. I think they're probably still doing a little bit of curtailing for energy purposes. So they get a little bit of income back from that. And also, ordinals, Bitcoin fees have sort of not been as high as they were before, so they get a little bit less from that. But on the, I suppose, more positive news, they only sold 2.8 Bitcoin. Whether that means they're sort of still diluting more, maybe you'd rather sort of at the $60,000 sort of price, they may be selling a little bit more Bitcoin. But I suppose if we're all hoping for a huge bull run, then all good. So having only sold 2.8, the holdings have now risen to 4,218. So rather nice, sort of 200 and what is that, 250, $260 million worth of Bitcoin on the balance sheet. So that's rather nice, and does presumably, it's not my way of seeing it, but it will sort of create net profit when they report results, if that's gone up. So yeah, potential for sort of expansion of well, not really PE expansion, but multiples of a profit that I don't really see as there, if you like. But that's the way everyone likes to think of it. And so yeah, operational updates. They've finished racking the company servers at their newly acquired sites in Mississippi, and they currently have 1.5 exahash and expecting 2.4 once fully operational. So that was sort of a quick buy and operational rather than sort of building out a new facility, which is good. And Dalton construction advancing on schedule, and they're targeting operational in 2020 in April, so next month, which is pretty good. It's only a small one though, 0.8 exahash, but it all adds. So, and these are going to be the sort of new Bitmain S21s, then yeah, very efficient. 24.6 joules per terahash they've noticed, so that's coming down. I think they want this to be sort of closer to the 20s to be as profitable as they can be. So all good. So I said I wanted to cover Pan American Silver because they are one of my larger positions, and I don't sort of give them too much coverage. It just sits there in my other ISA, in the Interactive Brokers ISA. But yeah, they've reported their results. Not looking too bad. Slightly under production estimates, but hopefully that can sort of rise up over the next year. Just come to their 2024 guidance first. They are saying for the full year 21 to 23 million silver ounces. They were sort of in the presentation for the merger, they were saying 30. So yeah, maybe a little bit short of that, or maybe they're just sort of maybe that's coming sort of 2025 or afterwards. But yeah, I think that may have been sort of a bullish estimate and probably not going to come to fruition. But the gold ounces as well, 880 to 1,000. So that's 880,000 ounces to 1 million ounces. Again, in the presentation, they did say 1 million ounces, so the top end of that is what they were originally projecting. And then the all-important all-in sustaining costs, 16 to 1850 on silver. That's pretty good. Some of the other miners that I'm in are in the 20s, or sort of at least in the high teens. And gold 1475 to 1575. So that's sort of in the midpoint. You know, a lot of people's new mines are sort of 1,000. Fortuna's new mine certainly is, and the greenstone for Equinox is sort of low 1,000s on all-in sustaining cost. But yeah, and overall 1475 to 1575, pretty good, especially with gold's rise yesterday to sort of $2,090. So not too bad. And just looking at their consolidated results, so obviously these numbers are going to be sort of drastically different, and you can't take this as growth because it's growth by acquisition and an awful lot of shares outstanding change. Of course, they've noticed there 210,000. 210 million shares to 364 million shares. So yeah, it's a big acquisition, but that now gives them sort of reasonably large revenue, and they are now a 1 million ounce gold miner. I do think the sort of acquisition and efficiencies in operating costs and administration costs and everything do need to sort of bear fruit, if you like, and get a full normalized year of these numbers. You've got all-in sustaining cost on silver 26.55, and gold of 14.11. Admittedly, that is quite low, but yeah, for that's for the 3 months. For the full year, they're sort of looking at 18.17 on silver. So just sort of last quarter hasn't been quite so good, but yeah, I do think sort of they need a full year after the acquisition just to sort of see where we properly are, and we'll see more sort of in the next couple of quarters at least. So just looking at Rio Tinto, all they seem to release is their annual report. There isn't a sort of consolidated version, and this is 360 pages. So I'm going to come down to the financial statements. I'm not going to be reading all of this, especially with it not being a particularly huge position for me. But yeah, it's they do an awful lot of greenwashing, as it's called, and yeah, I tend to just think of them as providing a vital material, but not particularly green. So I'm not really wanting to listen to all that. So their headline statements, sort of as expected, not quite as good as previous years with the huge iron ore price. Iron ore sort of down a little from previous years, but not too bad. Operating costs up $37 billion, and revenue slightly down from last year. So operating profit is down for the second year in a row, but I think that's kind of expected. It was a bit of a one-off in 2021. Profit before tax, though, still $15 billion. I think that's reasonable, and sort of net profit of 9.9, just slightly under $10 billion after tax. So yeah, earnings per share of $6.20. I think that was pretty good, to be honest. Price has obviously been up and down. It never really sort of follows these. You know, it's always looking forward and looking at the metals price, really, so it doesn't, you know, react drastically to these results. You kind of know where they're going to be sort of long before these results come out, and this is only to the end of 2023. Obviously, we're in March now, and we sort of know a little bit more of where we are for 2024. So yeah, just looking at the balance sheet as well. Property, plant and equipment up because they're investing more and more, and cash is up quite nicely, 9.6 billion, but you do also have borrowing up to 12 billion. So yeah, cash up a little bit more than debt, so that's not too bad. Total equity is up from 50.6 billion to 54.5 billion. Do much prefer having a look at the breakdown per mineral, though. So you've got iron ore at 32 billion of revenue. It's still by far the largest segment, and underlying EBITDA of 19.9 billion. Capex obviously is well, not quite as large as you might think, considering that EBITDA. They are still looking to sort of diversify into more aluminium, more copper, more lithium, although it's not really shown here. But yeah, iron ore is sort of by far the most profitable. You've got aluminium, 12 billion in revenue, you know, 2.2 billion in EBITDA, so sort of 20% EBITDA margin or so. Capex at 1.3 billion, so half the capex of iron ore for a very, very small amount of EBITDA. I mean, yeah, that's less than 20% EBITDA margin there. Copper is a little bit better, 6.6 billion in revenue and just under 2 billion in EBITDA margin. So yeah, what is that? Sort of high 20s in EBITDA percentage. Capex again though, $2 billion. Obviously looking to push the copper more and more, which is good. Obviously I've going after more copper-focused miners in KGHM, and see copper as more of an interesting metal than iron ore. And then minerals, including the diamonds and things, 5.9 billion revenue and 1.4 billion in EBITDA, so sort of just under 25%, and a bit less capex going into that. So all good, expanding sort of as I would kind of like them to. I do see aluminium as an interesting area. A lot of people are saying with electric vehicles sort of proliferating, they're very, very heavy, so they'll be looking to make more of the body and more of sort of certain components out of aluminium rather than steel. So aluminium should hopefully see a reasonable gain, and it's sort of used in lots of other parts of the green industry as well, more so than natural gas and oil. So yeah, I do like aluminium and copper more so, and sort of various other metals, and I don't mind them getting into lithium as well. That's have to see how that goes. And then we have Glencore as well. Kind of knew this wasn't going to be pretty because it was, again, a sort of very heavy one-off on coal. So that's largely gone away, and we're just sort of back to copper and nickel and that sort of thing. Still with a fair amount of coal, of course. But yeah, so 15% drop in revenue for a 50% drop in EBITDA and a 61% drop in EBIT. So and yeah, 75% drop in net income. So we all knew this was coming. Other people sort of maybe don't seem to have seen it was going to be quite this bad. So share price has dropped a little bit, but again, obviously not 75% because people kind of know this was coming, and it was sort of a one-off last year. But yeah, 34 cents earnings per share. I sort of own the UK listing, so I don't really sort of look at earnings per share too much. So they give their little breakdown of where the EBITDA comes from, and so they do a little bit of the marketing activities, sort of transport of everything, but industrial activities is still the bulk of that. 5.5 billion coming from metals and minerals, and 8.4 billion coming from energy products. I love the term energy products rather than sort of just saying largely coal. So 18 billion for the copper revenue and adjusted EBITDA of 3.9 billion. The mining margin sort of has some obviously quite a lot of adjustments because that is more sort of 20% EBITDA margin, low 20s, and adjusted EBIT at sort of 1.6 billion. An awful lot of capital expenditure going into that as well. Part of that are being sort of sustaining and part expanding. And you got 12.6 billion in zinc revenue for 1 billion in adjusted EBITDA. So that is always sort of much less profitable than copper. Sort of a net EBIT loss. So that's not great. Still a fair bit of capex going into that as well. But zinc sort of potentially has a slightly brighter future, but not at the moment. Nickel has been coming down tremendously, so it's potentially sort of an EV battery metal, but yeah, the price has sort of been tanking really. I think part of this, from what I've read, is Russia and sort of various other countries dumping what they've got to sort of raise a bit of funds for the war effort. So not great. But yeah, that's provided 2.5 billion in revenue and even an adjusted EBITDA loss. So even after various adjustments, that's a loss that is partly down to one sort of location rather than across the board, and a much bigger adjusted EBIT loss, and that is across the board. Still a little bit of capex going into that as well, but yeah, then you've got the energy side, which is sort of very, very large, and that's so 16.5 billion in coal revenue and a little bit of sort of other coal revenue, they note, for 7.9 billion in adjusted EBITDA. So still not too bad. It was obviously an awful lot higher than this in last year, but yeah, sort of 48%, high 40s on adjusted EBITDA margin, and that does flow through to cold hard cash, and sort of a lot less capex needed for that. Sort of it's double the copper adjusted EBITDA for sort of less than half the capex. So it's dirty, but it's still providing a reasonable amount of money. And yeah, you've got oil refining assets, which sort of are much, much less profitable, but they're still there. 7 billion in revenue for sort of 180 million in adjusted EBIT. So yeah, overall I didn't think this was too bad. I think people just sort of get a bit carried away and think last year was going to sort of carry on forever, which isn't the case. And balance sheet does look a little bit worse, has to be said. Sort of non-current assets down due to joint ventures, investments in joint ventures. Cash sort of pretty much the same, but yeah, accounts receivable and inventories and everything down. That's just sort of lower amount of business, I would expect. You got borrowings up as well, 18 and 18.8 billion to 21.2 in long term, and sort of slightly up about a billion in current debt as well. So yeah, you got equity down nearly 9 billion, or yeah, nearly 9 billion. So not too bad. I mean, there's 123 billion in equity for sort of less than half of that in market cap, I believe. So still a fair amount of sort of book value. But yeah, I think happy to sort of leave Glencore where they are for the longer term. Hopefully get a bit of a nicer move on copper, and hopefully nickel to come back sort of from the lows. So just looking news-wise, there wasn't a huge amount of news this week. You sort of had some, US data, things like durable goods orders were sort of quite negative, not particularly good. And you keep getting sort of various GDP figures, this sort of Atlanta GDP now figure that people seem to focus tremendously on, but it's sort of up and down like a yo-yo. US sort of Q4 preliminary GDP, 3.2%. This sort of is again all over the place, and it's preliminary figures, and it's for Q4, and we're into March, so it is kind of lagging data. But what we do have, current data, is jobless claims up to 1.9 million. Sort of quite a bit higher than expected, not ideal. And inflation, the sort of Jerome Powell's favourite, core PCE and headline PCE, sort of both down, basically all as expected. Headline PCE 2.4%, so getting towards their target. I think the target still is core PCE down to 2%, so it's down, and that's good. Potentially means a drop in interest rates, probably looking at May from what the market is now pricing in. And then Friday, you sort of still had this resilient UK housing market, 0.7% increase in house prices on the month, and that has now sort of turned this negative year-on-year figure to positive 1.2%. So you can't keep house prices down. And you had the preliminary EU inflation data, so that was sort of down from last month, but they were hoping it was going to be more down. But yeah, core CPI 3.1% for the year, so not too bad. And unemployment down slightly, still 6.4%. It's a lot higher than UK's or the US. So yeah, EU sort of could be better, but it's coming down. So portfolio for the week, as I say, Cleanspark sort of driving things up and down like a roller coaster, kind of to be expected with Bitcoin's movements, and yeah, with this sort of positive gold and silver move yesterday, sort of had a nice flourish to the end of the week on the miners. Sort of Equinox up 7.6%, Fortuna up 7%, and Kua Mining sort of slightly lower, but 4.6%, pretty good. And yeah, REITs sort of not really doing a huge amount, but yeah, not a bad week for the ISA. It was sort of, I think it was up at 140,000 actually, sort of on the Monday with the massive rise in Cleanspark. But yeah, it's come down. You can't have everything. On the ISA, Pan American sort of had a decent end to the Friday, but it's still sort of fairly low. KGHM not really moving. Obviously, that doesn't have gold. That's basically all silver as far as the precious metal side goes. So that needs more of a move in silver, I would think. And on the options side, it's been very positive with sort of Cleanspark not really moving because of the volatility, I think. And but the gold and silver ones doing pretty well. Equinox, I did actually add a little bit to Equinox. My $10 calls for in January 2026, but I also bought some $7.50 calls, just sort of because everything had been coming down, and to go from sort of 440 they are now to above 750 seems sort of very doable, and the returns still seem to be pretty good on them. So and also sort of in the unlikely, I think unlikely event, but if it doesn't go quite so well, and say they just went to $10, then I still make quite a reasonable amount of money on those $7.50 calls. So yeah, if my sort of thesis on this doesn't play out, and say Equinox does well but only goes to say $10, then if I carry on buying these $7.50 calls, then still make a little bit of money, where the sort of $10 ones would end up expiring worthless. Although I may be able to sort of sell them for a bit of a profit before then. But yeah, Coeur Mining sort of up a little bit, and Himax sort of with the slight rise. It sort of rose about 7% on the week, but the options have sort of dramatically increased. I think I was at sort of £700-800 loss on these last week, and I'm now £570 in profit. But these are sort of incredibly volatile. Again, that's only going from $5.70 to a $10 strike by January 26th. So needs a much less of a move, but people just don't like the stock. And then yeah, small positions in Fortuna is slightly up, and Desktop Metal is sort of haven't really paid much attention to that in the last week, but not really gone anywhere. So still £500 cash, and sort of I have got some on the sidelines, but certainly not really wanting to buy Cleanspark ones, and not really looking to buy gold and silver ones sort of with this run up. We'll have to see. So just piling cash at the moment. Got about sort of £2,500 in cash that I could certainly push this way if something happens, but we'll see. So leave your thoughts in comments below, and like and subscribe. See you soon.